Hey everyone, welcome back to Corporate Decoder, the place where we translate corporate gibberish into plain English. Today we're diving into Purple Innovation's latest quarterly report. And spoiler alert, it's a bit of a bumpy ride. Let's see if their innovative sleep tech is enough to keep the company from tossing and turning. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Come join us. So, what's the story? Purple, the mattress and comfort product company, just released its financial results for the first 3 months of 2025. The report shows a drop in sales, restructuring efforts, and some financial maneuvering. First, a little about Purple. They sell mattresses, pillows, and other comfort stuff. They started online, but now also sell through stores like Mattress Firm. They call themselves omnichannel, fancy word for being everywhere. Now let's dive into the numbers. The most important one, their net loss. For the 3 months, they lost about $19.1 million. Now, while that sounds bad, it's actually an improvement from the almost $50 to leaking. Let's talk about revenue. They brought in about $104.2 million in sales. That sounds like a lot, but it's about $15 with the itch, about $15, $9 million for less than they sold in the same period last year. That's a drop of about 13%, roughly equivalent to losing 1 out of every 8 sales. Now, cost of revenue, think of it as the cost of actually making and delivering those mattresses was around $63 in Uri. Battery sale, the higher margin. To get people to actually buy stuff, the company has to spend on marketing and sales. The company spent $36.6 million there. That's where they get their name out. It is actually down from before though, $4.8 million. One thing that is hard to avoid is debt. The interest expenses for the company was about $4.8 million. Let's look at the balance sheet. Cash is down to about $21.6 million. They have had to go and borrow $19 million for operations at decent rates. They needed cash, so in order to get that cash, in exchange, they agreed to give a warrant, a contract that allows the lender to buy shares in the future in order to get people to loan them money. There is a lot of money flying around with them adding another $39 million term loan. The people at the top are still getting paid, don't you worry. They paid themselves $368,000 in stock-based compensation. The current liabilities, debts that must be paid in less than a year, are at around $83.6 million. That means they owe around $83.6 million of the next year. Also, they have leases on a bunch of properties where they are leasing their showrooms from and their headquarters. Those operating lease obligations are in the millions of dollars. One thing to note is how low the company's equity is. The book value of the company is pretty low, about $1.3 million. Now, there is goodwill, a fancy way of putting value on a company based on how well people know it or expect it to make money in the future. And the goodwill is pretty low. So that is something that is worth taking a look at. Now for the less fun part. This is the stuff the lawyers make them put in the report to protect them. After the report has a warning that accounting is based on estimates. This means things could be very different. It's finance. Speak that means we're doing our best guess here. They have to guess how much they are going to make, what people are going to return, what their taxes will be, and so on. This is not unique to the company. Every company has it. They are consolidating some manufacturing and are losing a bit of money because of it. This is called restructuring. This will probably be better in the long run as these cost-cutting means will allow the company to become more profitable. In this first quarter, they lost $229 million. And then there are these fair value measurements, how much their assets are worth. So the company goes on about the debt term, risks, interest rates, and a bunch of accounting words, but really what it means that it is hard to value these liabilities. The company also has to keep up with changing accounting rules. It is nothing interesting to read about in the report, but what is interesting that a mistake may have to be corrected later on. Here is something very interesting. The company in the report warns that there may be a case where it is not possible for the company to continue, with warnings such as that there are operating and investing activities that have used $25.2 million. However, the company also is saying that they will be fine for at least the next year because of new loans and deals that they are making. Even the company itself says there may be doubt that they can continue. Let's see how it can get more interesting. So Purple got a loan from what they call related parties. It basically means that there is someone that is already on the inside. Now they are being lent $93.4 million, said and done. Now this loan has the secured overnight financing rate, a 3.5% floor plus another 8.25%. The interesting point is that any prepayment penalty might not make financial sense to prepay. So the company got a loan, but what did they have to give in order to get the loan? In the warrant section, the company says that a condition was that they offered warrants for about 6.2 million shares of the company, a fair value of $5.4 million. The loans are adding up. One thing that is always there, the company has legal issues. The long and short of it is their founders are trying to get more money from the company. Now, this isn't necessarily bad as the company seems to be defending it well. Also, big institutional investors or people who own big amounts of the company are getting benefits such as being able to easily register shares. The company only has one part of the business, making the same mattresses and stuff that we talked about. The company expects to get an additional $70 million from Mattress Firm in sales. One customer is bringing in 36% of the sales. Changes in trade policy with countries could negatively affect the company. They are currently having an issue with international suppliers. They don't know how things are going to go with these international partners. Since the stock price has been low, the company might not be able to remain listed on Nasdaq. If the company is not on Nasdaq anymore, it can negatively affect the stock. The company has a dilution problem with all these warrants flying around. This may make it harder for current shareholders to make money. Let's sum everything up. Purple has been trying to turn around a difficult situation. They have declining sales, but are doing what they can to make it more profitable. They are taking on loans, but the terms and conditions are not that good. Some former people that were in the company before seem to want money, and the company has to fight them. In order to continue operations, it seems that some big changes need to be made. The coming year is going to be interesting. Alright, that's our breakdown of Purple's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.